Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, April 28th, 5:07 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video, as I conveniently forgot to update the date there. There we go, Thursday, 4/28. So, state of the market. We are in a correction. If you've been following us for a while, you know we went to all cash Friday afternoon after the indexes broke key support levels and our stops got hit on our remaining positions. So we're showing market leaders in bearish slash downtrend mode, and all five indexes bearish across all three time frames that we track. That's the short-term 21-day, medium-term 50-day, long-term 200-day moving average. So what happened today? We've got a neutral comment despite the green results from the indexes. All we did today was bounce at support, which is a positive, but rejected at resistance, which is a negative. So despite the green returns, we're just really still a bit below where we were on Monday of this week. So G6, our growth proxy ETF index, up 1.35%. S&P up 2.5. Was up over 3%, but faded in the last 30 minutes. Nasdaq 100, good day, but not so good after hours. We'll talk about that momentarily. Up 3.55%. Dow up 1.85. Mid caps up 1.9. Russell small caps up 1.8. Diversified global 60/40 stock and bond up 1.23. As I mentioned, we're flat on the day as we've been in cash since last Friday. So let's get into what happened today. But first, let's take a look at the team here at Revere. Trend following is the approach we hang our hat on. That means participating in market uptrends, lightening up a little bit while the market goes sideways, and getting out of the way when the market's in a downtrend. And if you're interested in this approach, reach out to, you can email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. So let's bring up the tail of the tape and also the indexes. So as I said, we had a bottom and a bounce off of 4,200 on Monday, and that's basically what we had again today. People seem to be a lot more excited about today than they were on Monday, but you can see the bounce on Monday, big rejection and reversal on Tuesday. But this 4,160 to 4,200 area continues to hold. You can see how it's been support back here in March when we tried to bottom, back here in late February with the undercut when we were attempting to bottom, and really all the way back here in May, June of last year when we were trying to work our way higher. So good that we're holding there, definitely good, but the more times an area like this is tested, the more likely it is to give way. So we rallied up higher here, and we rallied right into a resistance area, this 4,300 area. You can see as you look over to the left of the chart how this 4,300 has been resistance and support periodically over the past year. That's where we stopped. That's where we reversed, which also corresponded with the ADMA. So really, we from a if you're a bull, you stopped right where we should have stopped, and you're a little disappointed with that. You want to blow through that and test the higher, more intermediate term moving averages and this big 4,400 level, which looms overhead. If you're a bear, you're like, yeah, we stopped right where we needed to, although we didn't break through to the downside, which would have been a break of that 4,200 level. So let's take a look at this intraday quickly. And things got kind of ugly early. We got the gap up, 1.3% gap up, pretty good number there, but we gave it up basically right away, back down to flat on the day on the S&P, then a bounce attempt, put in this little cup and handle you can see here, but then we broke through with authority at 12:15, and this is just algorithmic buying when you see steady uptrends like this. So this is buying, broke above the day's high, and where we opened got into this resistance or this consolidation area, this 4270 plus to 4290 area, broke above that, tried to challenge 43.10, but then you can see we gave it up in some. Look at the selling volume that came in toward the end of the day. I don't know if it's higher than normal, as there is typically a cup formation on volume where it's skewed heavier in the beginning and the later part of the session, but definitely gave it up. And now after hours, let's bring up the SPY. Down 0.8% on the S&P 500. On the Nasdaq 100, even worse, down 1.68%, and that was chiefly because Amazon is taking a beating, down 11% after hours on their earnings report. The other big one after hours was Apple, which was up 3%, and Apple is now down 1%. Not good. So we're behind the 8 ball, starting for the futures at 6 o'clock and 6 Eastern, and where we will open tomorrow morning. No telling what happens overnight, as there's always a bunch of volatility there. So let's bring up now the Dow Jones Industrial Average, and let's go to the tail of the tape before we dig into that. So quick summary for kind of the macro perspective. Market and correction, as you know, we're facing the same headwinds that we have been for a while. Put call has been elevated a bit lately, got up almost near 1.3 today again when we were pulling back. But then when we bounced, it dropped to 1.15. VIX is at 30, down 5% from yesterday. Fear and greed jumped up. A jump up is actually less fear, up 9 from yesterday, but still at a 38 and in the fear range. So our bull case failed on 414 when the rally failed. So our bull case failed. So we're in the bear case right now. Rally failed, break of the moving averages. That was confirmed on 422 with the break of support at 4,400. News today, Q1 GDP surprisingly negative. That means that Q1 was confirmed as the first quarter. The definition of a recession is 2 quarters of negative GDP. So we got the first quarter out of the way, and much quicker than anybody expected. We were expecting a 1% gain on GDP. We got a minus 1.4% loss. And then, as I mentioned, after hours, Amazon, well, I set these when I started at the beginning, but now Apple down 1%, Amazon down 11%, not helping. So what I was watching coming into today, I always want to see something very key. What am I looking at? And it continues to be for a couple days now. Well, this 4160 to 4200 area, which we tried to break below, well, it flips from what was support to resistance. And the good news is, we gapped above 4,200 and tried to pull back, and the pullback held. So this 4,200 as of right now is holding at support. That is good news if you're a bull. And then we trended up before the late reversal. But so as far as this would be a negative if this 4160 to 4200 flip, if we broke below it, it would be a big negative. Actually, let's just revisit this area on the S&P 500. This is really the key area that you need to be concerned about. It's the lows that have been tested for the last 4 days, and then you go back to the beginning of March. It was a very key area. We overshot 4,200 down to this 4160 area. So this area really needs to hold. Key area to keep an eye on, and again, I'll be watching that tomorrow. So this here is just a handful of names, well, maybe 2 handfuls of names that were part of the 2121 from the prior Friday where we broke the 21. I want to see how they acted around their 50-day moving average, and you can see oils and fertilizers are holding, as well as General Dynamics in the aerospace defense sector, Lilly in the medical sector. Caterpillar had a big negative, a big gap down, but then a positive reversal on their earnings today to close right on the 50-day. Some other leading areas, cybersecurity, those are holding their 50-day area too, as well as Costco. But these have been going back and forth all week on a variety of them, between the green check mark, which means they're holding, and the red X, which means they're not. CCJ really gave it up. So the action today, as I said, we gapped up 1.3%, then trended lower, undercut and reversal at 4,200, broke higher at 1215 to the 4,300, but then we overshot and reversed there with the late fade. For a key downside level, remember those 2 spikes, those 2 big slingshots to the downside on January 24th and February 24th. If we're looking for another one like that, when we get 8% below the 50-day moving average, that level is 40.38. Long way to go down to that. We're 5.8% above it on today's close. Strong sectors say the dollar continues to be strong, and that's hurting stocks. Chucky was strong. That's XLC, XLK, XLY. That's communications, tech, and consumer discretionary. The SOX was strong. IGV was strong. Really the opposite of yesterday when they were weak. Oils and base metals started weak but finished strong. Really the only weak sector today was the shippers. And again, no trades as we're flat. Bottom line, support held, rally into resistance that failed equals a range-bound market between 4,200 and 4,300, and that's where we've been for the last 5 closes. That's the area very clearly to keep an eye on. 4,300 to the upside, 4,200 to the downside. Let's take a look at a couple of individual stocks that might be of note. Let's look at what survived, the 5 that survived last Friday's 21 over 21, where 16 of the 21 failed, but Delta Airlines held, and it still held the 21, so that's still definitely in the positive category. Dollar Tree tested and held the 21-day moving average, so that's still holding up fine. LNTH, medical stock, undercut the 21 twice, but has held it on both closes, but does have earnings tomorrow, so we're very much interested in what's going on with that one, as this is a kind of a stock that just became a recent leader as of its last earnings report. Nucor is the 4th one, and that's holding the 21 nicely, been ping-ponging back and forth all week, but closing above it. And finally, PSA, REIT, has been ping-ponging, but more to the downside as its 21 is rolled over. And let's take a look at XLRE. REITs, we have been talking for a while that it didn't make a lot of sense that they continued to stay strong in a rising rate environment. Well, they had a failed breakout on the 20th and 21st. You can see them pulling back here toward the 50-day moving average. So money that flowed into them has come out of them, and it's been with volume. Look at how we've been above average in volume on XLRE for each of the last 5 days. Outside positive reversal to the upside today, but pretty much every stock in the market did that today. If it didn't, they're kind of weaker than you might expect, but that was kind of the candle that ruled the day today. And as you know, 75 or so percent of stocks are going to do what the market does, and with all of the 11 sectors being positive today, that was certainly the trend of the market. So that's going to wrap it. Tune in tomorrow for the 21 over 21 update. I'm not quite sure what I'm going to do with that yet. As I mentioned, 16 of them faded. And I also talked in Tuesday's video about how our last 14 sells are all still below where we sold them, and that's very clearly a sign of market weakness. The ones that are closest to bucking the trend are in fertilizers and oils, so those continue to hold up the best. So tune in for that tomorrow, and then we're also going to be doing the podcast tomorrow, which will be released on Saturday, so definitely tune in for those. So wrapping up today, Thursday, 4/28. This is Don Vandenbord telling it like it is. Thanks for listening, and have a great day.